Hi friends, welcome to our Tax TV channel. The TP study or TP documentation includes the following. 1. Objective and scope of study or document. Its objective is that the company's pricing should be at an arm's length standard. 2. Business description. Profile of the Indian entity and foreign entity or entities should be analyzed along with their businesses, products, projects, etc. 3. Products or services. Profile is to be analyzed completely when compared to similar industry or companies at domestic or international level.
4. Industry analysis. If it is software or ITAS, a BPO or any manufacturing industry, specific industry is to be thoroughly analyzed for that particular year and incorporate in the TP documentation or study along with growth standards. Nobody announced their margins except annual report. 5. Arm's length principle. According to Indian standards and OECD standards, ALP is to be examined thoroughly and the margins should be based on ALP standards on the 6 methods. 6. Pricing policy and agreements. Agreements should be well drafted between Indian entity and foreign entity or entities and mention about pricing policy according to latest TP regulations, and the agreements should be reviewed every year according to changes in TP regulations by the Indian government.
7. FAR analysis. Functions of the Indian entity and foreign entity, risks of the Indian entity and foreign entity, and assets analysis are to be analyzed, so as to enable us to functionally similar, independent and related comparable with the Indian entity. 8. Selection of most appropriate method. There are 6 methods. 1. Comparable uncontrolled price method, CUP. 2. Resale price method, RPM. 3. Cost plus method, CPM. 4. Profit split method, PSM. 5. Transactional net margin method, TNMM. 6. Other method. 9. Comparable search process. There are Indian and foreign public databases. They are to be applied basing on our Indian entity or foreign entity (EES) business, which is most suitable. The Indian public databases are Prowess and Capitaline. They contain more than 65,000 public companies to analyze which is more suitable independent and related third-party companies to our company under any of the above methods.
10. Application of most appropriate method. In this, the examination of tested party, aggregation of transactions, test period, arm's length range, selection of PLI, and assessment of profit comparison by utilizing any of the above methods. For your company, ATNMM can be used and the average net profit margins can be compared with the net margin or operating profit margin of the company. We can give similar comparables basing on your company's services or products or technology. A model of benchmarking study for the last 3 years for one software technology company and their comparables are as under. This is for financial year 2017-18 as an example. Please note that for the financial year 2021-22, it will not be disclosed the comparables openly for any company. The comparables are differ from company to company. We shall apply customizedly for each company after analyzing the public databases and their businesses profile and services. Conclusion. It is advised that considering the turnover of your company, the operating margin or net margins on sales or cost, between 18% on cost or 17% on sales, shall be maintained. This is the range of ALP shall be maintained under CPM or TNMM. Contact Online Tax Specialist 22@gmail.com for online preparation of TP study or documentation. Website www.onlinetaxspecialist.com